Blinkit CFO Vipin Kapuria resigns a year after taking over the role. Shares of Eternal are down.
Sharp drop in metal prices amid profit-taking. Gold, silver, platinum and copper retreat from recent life highs, although metal stocks continue to rally.
Divergent views from Avendus Capital on couple of textile counters. The brokerage initiates a buy on Indicount, but a reduced rating on Welspun Living. Says tariff normalization and trade accords continue to be key monitorables for the sector.
Muted moves on Waaree Energies. Chief Executive Officer Amit resigns and Jignesh Rathod appointed as the CEO designate with immediate effect and will take over as the CEO starting May next year.
ICICI Prudential MF picks up 21.82 lakh shares at 950 apiece via multiple block deals in Intero. Shares spike 4% in early trade. Hello and welcome to Chartbusters live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta and with me is Vinny. Well, it's turning out to be a session where it is absolutely quiet, so no prizes for guessing. It is holiday season and there is a very quiet temperament on the markets at this point in time. So the Nifty just about higher by around 28 odd points. We have the mid-cap index, which is absolutely flat at this point in time. And we have the advanced decline ratio, which is absolutely even keel. So nothing great which is going on. Specific stocks such as Eternal continue to be in focus. Defense stocks also continue to be in focus. But overall, the entire market setup is extremely quiet going into the new year tomorrow.
Absolutely, extremely quiet going into the new year, but do not forget that today is that expiry day as well. So monthly expiry also is something that comes into play. And look at the markets, right? At the opening day and opening bell, we saw the market open in the red and then has recovered from the day's lowest point, at least in the green, just a slight bit of a positive bias that we're seeing there. Nonetheless, at least from the day's lowest point, we're seeing a recovery there. Advanced decline ratio, also that line which you all just saw on the screen, seems like it's nearing that crisscross. That is something that we'll be keeping an eye out on. So let's watch out for, where this moves in the rest of the day as well. But let's also bring on board Dharmesh Shah from ICICI Securities for a technical check on the market. Dharmesh, good morning. Thank you so much for joining us on the show. Markets as of now have recovered from the day's lowest point, 26,000 on the cards. What should we watch out for, Dharmesh?
Yeah, so good morning and thank you for inviting me on the show. First of all, wishing you all a happy new year and a prosperous new year going forward to you entire team of CNBC and your viewers.
Same to you as well, Dharmesh, and your team.
Yeah, thank you. So as far as market is concerned, if you look at the market for last 6 weeks, it has been consolidating in this range of around 25,700 to 26,200. It looks like, market seems to be forming a strong base in this range, where 25,700 looks to be the very strong support which we expect to hold. Market should form a higher top, a higher bottom formation in this range of 25,800. And eventually, we believe, market should look for a target of around 26,200 in the coming week. So yeah, it's something like, so the risk reward looks more favorable. 15-week EMA, we also placed at around 25,800. And also, if you look at the trend line, long-term trend line, joining the lows of October, November, and December, the value for the same is placed at around 25,800. So 25,800 to 25,700 remains to be the very strong support for the Nifty. One more point to highlight on your channel is that there's a lot of noise talking on the VIX, which is trading below 10. But if you look at this particular quality from 2017 to 2025, there has been 2 instances where the VIX has moved below 10. And both the time in 2017 and 23, the formation of the Nifty was something like cup and handle formation. And the current context also, if you look, the formation is something like cup and handle with VIX below 10. Now, all the 2 times, Nifty has found a positive breakout on the higher side. We believe, so the Nifty should follow this rhythm this time also, where 25,700 will definitely hold in this current volatility, and we should be making a new high in the month of January. So it's something that buy on dip should be the strategy going forward.
Okay, all right. Just wanted your thoughts on a couple of these counters in the Nifty space. If you could give your, chart check on the likes of a couple of these auto counters, Hero Moto, M&M, which are managing to hold up well today, Dharmesh?
Yes, definitely. I can't talk for the Hero Honda because it's something under the compliance. But yes, definitely we can talk for M&M. I think so. M&M is something the one where we believe. I think so. The way the formation, the stock has seen a good correction from 3,800 to almost 3,550. 35.40, 35.30 remains to be the very strong support for M&M. We expect M&M to head towards 37.30 to 37.40, keeping a stop loss of around 35.80.
Okay. Dharmesh, any other names that you're watching out for any of your picks today?
Yes, definitely. I think so. We like the large cap space as a whole. If you look at the IIP numbers, I think the strong sets of IIP numbers looks to be, I think so, going forward, capital goods as a sector should do good better going forward, where L&T remains to be our topic, where again, if you look at the chart, I think so from 6 weeks, the stock has been consolidating in this range of around 4,100 to 3,900. We believe, I think so, L&T, once we see a breakout about 26,200, we definitely, I believe that L&T should relatively outperform going forward outside the capital goods space and forming a strong base above 52-week EMA. We expect L&T to head towards 43.50, keeping a stop loss of around 38.50. Apart from L&T, which we like the sector in the matter and the space as a whole looks positive. Again, I think so Tata Steel as the one remains to be our top pick. Again, the stock on the weekly time frame forming the rising channel and holding the 52-week EMA most of this time for last 1 year. And expecting, I think so, Tata Steel to head towards 192, keeping a stop loss of around 157.
Okay, all right, Dharmesh, we're going to leave it on that note. Thanks very much for joining in and giving us all of those stocks which are in focus. We need to take a short break with the news that the markets are extremely quiet at this point in time. But the Defence Acquisition Council has cleared proposals worth 79,000 crores. The management of Astra Microwave Products will join in on the other side to discuss the prospects for the company. Welcome back. You're still watching Chartbusters. Well, let's get talking about the Defence Acquisition Council, which has cleared proposals worth around 79,000 crores. Astra Microwave Products could be a key beneficiary of the recent cleared proposals. It has also signed an MOU with Bharat Electronics to develop advanced electronic modules. So to discuss both these points, as well as more on the business, we have with us Atim Kabra, who's the Director of Business Development and Strategy at Astra Microwave Products, now joining in. Mr. Kabra, thank you very much for taking the time out. If you could just start by telling us about this 79,000 crores in terms of projects which have been cleared by the Defence Acquisition Council. Which are the projects that you would possibly bid for and benefit from?
Good morning. I think this is a continuation of the multiple order books which have been released over a period of time. And we are in a position to be fulfilling the radar-specific orders, the IF cards, etc., etc. So a lot of subsystems which will be going into a whole lot of product range out there. We will be a party to that. So, we did not expect to end this year on such a very positive note, where future growth not only looks strong and assured, not based on prospects, but actually on clear execution pipelines over the next 3 to 4 years. And I think this is just a continuation of that.
All right. Just if you could provide us numbers of this 79,000 crores, what is maybe the quantum that you would be bidding for?
We are still working on the numbers because it's a part of a supply chain which we will be a part of, right? So the numbers, when you come down to very specific numbers, they are based on what comes in and at what time frames. But there are programs over there, like the one which you're displaying out there, low-level lightweight radars, etc., where we are very, very strong contenders.
Okay. Hi, Mr. Kabra. Good morning. This is Vinny joining in the conversation as well. So mainly y'all will be of supply components, subsystems is what y'all will be participating in, right? If I'm not got it wrong.
Yeah.
Okay.
See, yeah, sorry, go ahead, please. Yeah.
No, please continue. I was just trying to understand what exactly comes into this as well, or will there be complete systems as well that you all will participate in?
Okay. The order pipeline, which we disclosed in the previous interaction and the analyst calls, etc., were based over the execution pipeline visibility over the next 3 to 4 years. We are basing it on QR SAMs, which with Bell, where we have signed a MOU, which you guys just mentioned. Is based on QR SAMs, is based on Uttam radars, it is based on Angad program, which is the first lot of Su-30 upgrades on EW space, where we are the lead system integrators, is based on Virupaksh radar, the first lot of that. And it's based on ARC, which is our JV company, which itself has an order book, which will have an order book of at least $100 million before this year ends. So these are all programs which are now going into execution phase. It's not prospects. So that's what gives us the confidence to state that there is a very, very strong execution pipeline.
What is your current order book, if you could help us with that as well?
Come again?
What is your current order book like right now?
Current order book is right now 2,350 odd crores on a consolidated basis, standalone around 2,000 plus.
Okay. So just getting back to the order book, since you are talking about the fact that there is execution which you're now looking at and it wouldn't be just in the bidding stage, I understand that you had said that you expect order inflows of around 400 crores in Q3 and 600 crores in Q4. Is that correct?
Yeah, we will close the year. See, I like to look at it on a yearly and a bi-yearly basis, okay? Because quarter-wise, depending on where your negotiations are, etc., the orders may come in and may slip out. But we have given a guidance about 1,400 crores for the current year, FY26, which we will cross. All these programs which I just mentioned about QRSAMs, Uttam radars, Angads, Virupakshas, they are all beyond these numbers.
Exactly.
If you really look at it, I think we are talking of an execution pipeline in excess of 6,000, 7,000 crores over the next 3 to 4 years. And if you contrast it with our current business, which we are doing, it is many folds over that. And it's not only us, right? If you look at the defense sector as a whole, there are a lot of positives and there are a lot of real tests which I don't want to downplay also. There's a very strong order book across the board, and it's across the board. There is a record production which is happening, record exports which are happening. But real tests, I think, will come in the form of execution capabilities, the funding requirements which are going to be there, the technological depth which you will have over there, the supply chain depth, which is extremely critical. Your project management skills, your skilled manpower, your procedural delays in procurement, et cetera, et cetera. Okay. And of course, there is a little bit of an import risk also, which exists in terms of FX as well as sanctions, possibly,
that
which
point
is not there as such. But, when you look at the matrix as a whole, these are the various things which strike at you.
Sure. Mr. Kabra, just on that point, since you are so bullish in terms of the execution pipeline, I just wanted to understand what is the kind of competition that you're up against when it comes to bidding. And what does that do to your margins? Would that be at a lower, more competitive cost? And hence, would you be able to maintain your margins at these 21% levels?
These projects which I mentioned are already ours.
Oh, okay.
So there's no competition here. We have been L1 and we have made it across L1, L2 levels in all these projects, right? So as we go along, now the focus shifts across to new products which are being developed as an end-to-end complete solutions, which will test their mettle against the best in the world, if I may say, right? I am very confident on our engineering skills, our capabilities to create products now which can go head-to-head against the best probably over the next 3 to 4 years, right? So these projects, as they wind down, you will actually have products coming in and solutions coming in, which will really drive the whole thing forward. So on margin fronts, we will be maintaining, or we have no doubt at this point in time that we will be maintaining our markets and maybe bettering them also.
What does this mean in terms of growth for you, Mr. Kabra? Because, you've put behind quite a muted Q2 for yourself. where your revenue was down around 7% year-on-year, your EBITDA was down around 6% year-on-year, your net profit also declined. So based on the execution pipeline that you're talking about, what is the guidance that you can provide in terms of the numbers for the foreseeable future? Revenue, EBITDA, profit growth?
Here, we don't want to look at things on a quarterly basis. This is not a business you should be looking on a quarterly basis. That's not the right sector if you're looking at it. It's not only us, probably everybody, right? But if you look at it on a yearly basis or a bi-yearly basis, right? Okay, our guidance is probably for the next year, we should be doing somewhere between 1,400 to 1,500 crores, going up to 1,650, 1,700, and then somewhere close to 1,900 to 2,000 odd crores. Now, a lot of it, there's a disclaimer here, a lot of it depends on the delivery schedules, which are based on the offtake schedules of the partners who are taking these products from us.
Mr. Kabra, but you've given and you've previously spoken about an outlook of around 15 to 20% growth rate. Is that something that will continue? And overall, obviously, could you just highlight a bit in terms of your MOU with BEL as well? Can you talk to us about what kind of tech will that come in, and when is that expected synergy or revenue start showing in your books as well?
Your first part about, sorry, can you give me the first part again, please?
So I wanted to know, you'd spoken about that 15 to 20% growth target as well. So is that something that is maintainable?
Yeah, I got it. If you look at these programs which I'm talking about, we are actually nearing the top end of our growth guidance. So we'll maintain that. We may exceed it, but we'll maintain that for the time being at this point in time. 15 to 20% top end of the range. As far as BEL is concerned, I think they're one of our esteemed customers and partners, and we are looking at, their order books are burgeoning and overflowing, and I'm sure that the components, the subsystems which we supply to them, etc., they will find a very steady offtake, and in the form of a very trusted and reliable partner that Astra has been for them over the years. So we are also looking at collaboration in the area of space sector, where Astra is one of the key players over a period of time, more than a decade-old key player. And I think that's one area where we see a lot of synergies between us and BEL, where combined we can really do wonders, in a sector which is really going to be opening up big time.
Okay, Mr. Kabra, thank you so much for joining us this morning and giving us your perspective in terms of the recent announcement that's coming from the Defense Acquisition Council, as well as your MOUs and outlook for the company going forward. Hope you all have a great new year as well, and wishing you as well as a team a very happy new year. Thank you so much for joining in. But on that note, we're going to slip into a very short break. We'll get you more on the markets and stock-specific action on the other side. Welcome back to Chartbusters on CNBC-TV18. The markets as of now flip-flopping between the red and the green, but very muted in today's trading session. But let's focus on to our special segment now, where we will get you a few ideas of profit from Money Control Pro. Neha Dave of moneycontrol.com joined us now to talk to us about the stock that she has been tracking closely. Neha?
Today's stock idea is Canara Robeco Asset Management Company. The Indian mutual fund industry is going from strength to strength. While the growth prospects of the mutual fund industry are undeniable, the Indian market is highly crowded with 49 fund houses competing for investor attention. Moreover, the top 10 players control over 70% of industry's AUM, that is asset under management, indicating concentration at the top. So the key question is then, why consider a smaller player like Canara Robeco? Canara Robeco, with asset under management of rupees 1.19 lakh crore as of September end, is predominantly equity fund house with around 90% of its AUM invested in equity-oriented schemes, which is a key strength. The asset mix is positive as equity funds earn higher management fees as compared to debt funds. Also, the entire equity portfolio of the AMC is actively managed. In an environment where passive investing via ETF and index funds is gaining traction, this stands out as a major positive, as actively managed funds earn significantly higher management fees as compared to passive funds. And last but not the least, the valuation of the company is attractive and can potentially re-rate. At the current market price, the company has a market capitalization of rupees 6,200 crore, which is 5% of its trailing AUM as of September end. In terms of price to earning, the stock is trading at around 24 times earnings estimated for FY27, which is relatively attractive. Given that return on equity is around 35% and favorable industry tailwinds, the stock offers upside potential. The recent price correction due to regulatory changes offers a tactical opportunity to long-term investors to accumulate the stock.
Okay, all right, Neha. Thanks very much for getting us that update. Well, for the markets, it's extremely quiet, but just a couple of stocks which stand out, and maybe, looking at them on a year-to-date basis to get an idea in terms of how they've gained over the year will be good at this point. So MK Global, not much in terms of volumes, but if you look at the counter, it's given returns, handsome returns of around 80% this year. So that stock is in focus on account of the returns. We have India Glycols as well as Paradeep Phosphates, both of these stocks which have given returns of anywhere between 50 to 55% on a year-to-date basis. So both the stocks are in focus in today, focus on year-to-date gains. And even CSB Bank, if you look at that stock, it's been doing well this entire year. It's given returns of over 35%, so that stock is in focus as well. Currently, that stock just about higher by around 0.8%. But that's what's taking place in terms of the markets. It's quiet otherwise. The advanced decline ratio is on the declining side, and we have the mid-cap index, which is marginally lower and underperforming. It's a wrap on the show. Trading Hour comes up next.